welcome back. Installment sales are nothing more than someone selling the property, getting a down payment, and then accepting payments for a period of time. Now, this is my way of introducing it to my students who buy properties at tax auctions for 10, 20, 30 cents on the dollar, but they want to sell them quickly. And one of the ways you can sell quickly is buy it low and sell it low. That really helps. But if you could buy it low and sell it low, and then you're willing to accept payments, that's an installment sale, and the whole process gets accelerated so that you can make your money and continue making it. Now, I've had students that bought as many as 60 properties and then sold them using installment sale. And the installment sale was generally 10 years. So that meant over the period of buying the properties and reselling them, they were getting up to 60 payments every month. Believe me, that's the way to get wealthy, is let other people send you payments. And they certainly did that. Okay, so the information that you're going to get on this video is going to show you how you can be financially secure in just a few years' time. Now, I always say America buys on payments. They do everything from buy their cars that way, to cell phones, to the boat that they want for recreation. Even sometimes those big campers you see, as big as a Greyhound bus going down the road, those are all sold on installment payments. Now, the average person wants to have an installment payment just on an automobile of 60 or 72 months. So people are used to making those kind of sales. Banks call them a mortgage period. They don't say it's a 30-year mortgage or a 20-year mortgage, but lots of people buy their furniture, but do nothing but installment sale. So anything can be purchased with an installment sale. However, people don't think about that. They don't think about being the lender. So if you're going to buy these properties at good prices, then you want to think about the selling. Now, you make all your money basically when you buy the property. If you buy it right, you're going to make money. All right. So when you go to sell it, you can sell it quicker with installments in many cases than you could just getting one payment. Now, the beauty of installments is you're going to make your profit margin when you sell, and you're going to make money on the actual financing, which I'll demonstrate before we finish. All right, now credit cards, what's going on there? Well, people actually buy properties with credit cards. They don't just go to Home Depot and Lowe's and Walmart and those places, well, where you can use your credit card. You can actually, in some counties, buy properties using a credit card. All right, so all this installment sale is it's a big brother to the automobile loan, which currently is about 60 or 72 months. Now we're probably going to lend for 10 years. You could lend for 20. I'd say do an installment sale for 10 years. You'd have all your money at the end of that time, and you'd make significant money. Okay, so real estate is nothing more than something that's going to be sold with some kind of contract. So we're just going to sell it on a contract, not a mortgage. Now we're going to sell it, but we're not going to pass the title. We're not going to lose our title and ownership of the property until we get full payment. And that's your security. Those people will keep paying you, otherwise you could just evict them. So a 30-year mortgage, it's the same way. You're not going to get title to that property free and clear until you pay that complete mortgage. We're basically doing the same thing, except we're going to do it much less time, and we're going to work with people, which is about 25% of the market, that don't have good credit. Now, maybe they made some mistakes. Maybe they got a divorce or had a bankruptcy. Maybe they had sickness. Maybe they ended up in a foreclosure because the market dropped and the mortgage was more than the property was worth. I don't know, but I can tell you, in the 30 years of a mortgage, a lot of things can happen in a couple's life, and many of them end up losing the property, and if they do, now they've got a poor FICO score. So these are the little guys, and what they need is they need a roof over their head, they need a down payment, and low monthly payments. They really don't care how long the payment is, but they do care about how much their payment is going to be. So this opens up a whole new world for anybody that's a seller. Now, we're sellers because we're buying properties at a tax defaulted auction. So we're trying to get them for 10, 20, 30 cents on the dollar. Will they be brand new, pristine property? No. They're probably going to be slightly used and abused. Some may even need to be fixed up. But the point is, those properties are acceptable to people that don't have good credit, that aren't going to be able to move back into the country club. So you're not doing business with country club people. You're not doing business with 30-year loans. This is a unique market that allows you an opportunity to sell and not only make money on the margin between what you paid and the value, there's a margin there, but now you could make money on the actual selling of the property and being able to do the seller financing. All right, so what is an installment contract on real estate? Well, it's nothing more than a small down payment and payments for a period of time, usually about 10 years. Now, who does these? Well, anybody that buys a home wants to do this. Anyone that buys land wants to do it. So there's going to be plenty of market out there for people that do it. So you can do it any place you want to do it. Now, real estate means a lot to a lot of people, all right? Now, locally, if you look around, the bankers involved in real estate, the brokers involved in real estate, the title company is, and of course, all those real estate agents. So that's a very structured business. Why is it structured? Because you got so many people all trying to make a buck. So the law and the rules for all of the people involved in real estate are very inflexible, okay? The loan standards are sky high because they want to make sure they're not going to get the property back. And they can do cookie cutter deals. By that I mean, if a builder builds 500 homes, they can have 2 or 3 people handling the whole thing because every deal's the same. It's a cookie cutter. Exact down payment, exact loan, go to the bank, exact interest rate. You're not going to be in that market. You're going to be in a market where you're dealing with properties that could be in all different parts of town, could be in different states. The point is, you're going to have to be a little bit more innovative and unique than the regular real estate agents. So the brokers, the bankers, all of them have a lot of rules to follow. Now, I'm not suggesting you not follow the rules. You will have to follow the rules of lending according to the Treasury and according to your state, but we can do our own loans for as long as we want, and we can accept any down payment we want. Now, why can we accept any down payment and any monthly payment? Simply because we're going to sell the property with a contract and we're going to retain the title. If we retain the title, we still own it. We do not have to give up that property until such time as we get all the payments. How good is that? All right, now a regular mortgage, look at the right side of the slide. The regular mortgage, that's how many pieces of paper there are. That's a lot of paper. You're going to be able to do this on 1 or 2 pages. Do we have contracts for that? Yes. Could you get contracts from a title company for that? Yes. It's not going to be a problem. The standard installment sales is a mortgage. We don't want a mortgage. We want a contract to sell the property. We will keep the title to that property. Okay, title companies have extra contracts. They have due diligence that has to be done. They have disclosure that has to be done. So you can have a title company put this deal together for you. They'll be more than happy to do that. So they'll have all the paperwork, and they'll do the paperwork for you. You can sit there, sell your property, still have your security of the title, and now make more money. You're in the business of making money. Entrepreneurs have a lot of unique things that they can do. You're now going to be that entrepreneur doing that. There's nothing entrepreneurial about a bank or a real estate agent or anybody that's at a title company. They're going to do the exact same thing again and again. And if you don't fit the mold, it's not going to happen. All right, so those real estate agents, they are doing everything they can to follow the rules. All right, that might take them 6 months. You can make your sale this afternoon on the hood of your car. That's right. You can do the whole thing quickly. Does that avoid a lot? Does that avoid waiting for a loan? Does that avoid inspections? Does that avoid appraisals? Does that avoid what? It just keeps avoiding things. That's right. You can get it all done as long as you're doing legal and ethical business, and you can find out for the state law, what does it say about financing, but it's perfectly legal for anybody that owns a deed to sell their property to anyone they want. So that's what you're going to do. So what question are we answering today? What is an installment sale? So you understand what a sale is. That's real easy. But if you go to the bank, they're going to give you an installment sale, all right? It's going to take 30 years. They don't want to lend on a $75,000 or $100,000 property. It's not enough money to lend. Plus, at the interest rates today, they wouldn't make anything. You can make much larger interest rates, and you can get paid in not 30 years, but in 10 years or less. So no negative on the banker. Let's just do this ourselves on the hood of the car. All right, so what you're going to do is you're going to be involved in what is the installment sale in real estate. And you're going to capture the opportunity in 2 ways. One, you're going to be able to sell quickly for the price you want, and 2, you're going to be able to get payments for as much as 10 years. So think about working once, getting payments for 10 years. How good would that be? All right. Now, for most investors, this is the most important rule. It's not the one they ask. The most important rule is, can you get the money is the most important rule. It's not, what is the interest rate? The interest rate doesn't matter because you've got to have money before you can make the deal. So they want to know from the seller, can they get financing? In other words, can they get the money? They're not going to bargain with you over interest rates. Now, did I say to sell at high interest rates? No. Figure it out ahead of time and always be below the market. All right, now lenders rarely want to do this kind of business. Why? Because it's too entrepreneurial. They want to do cookie cutter deals. In other words, same house, same down payment, same monthly loan, all that stuff. Why? Because they get brokers involved, title companies involved, agents involved, and new people working at the bank. So they've got to standardize it. You don't have to standardize anything. You can do this on a 10-year loan. I've had clients do as many as 60 in 6 years. Imagine doing that and getting 60 payments every single month. That'll make a lot of difference. All right, now where are we buying these? Well, we're talking about an installment sale. We're basically buying tax defaulted property. Now, what does that mean? The tax defaulted property means the tax collector confiscated the property. Now, they can't pick it up with a truck, but they can confiscate the title and all that, and they own that property. They don't want to own the property. They just want to sell it, and they just want to get their back taxes. So they have an auction. And when they have that auction, they're going to discount 60, 70, 80%. Where are you going to buy anything for a 60, 70, or 80% discount? This has been going on for 200 years. I didn't invent it. The government invented it because people didn't pay their property tax. So what did they do with the properties? They sold them at auction. Anybody could buy that property at auction. And if you did, you bought it at a low price. All right? Well, if you bought it at a low price, what do you want to do with it? If you buy low, you can sell it low. Now, across the United States, look at those little lines all over that map. That represents the counties. There's over 3,000 counties in the United States. Every one of those counties will sell property with no mortgage and no deed of trust. That means you're getting the property free and clear. Now, if you bought a property at the right price, now you made money. So if you bought it 10, 20, 30 cents on the dollar, you have margin all the way to the price you want to sell it for. Is it legal? Is it ethical? Yes. People have been doing it for well over 200 years. So there's the slide. Buy it low, sell it a little higher. Yes, I know the graph goes up. Let the other guy make some money, get your cash, go back and do it again. Get your cash, do it again. The people that are credit challenged will buy these from you all day long. Why? Because the bank just rejects them, will not even talk to them. So the people with FICO scores that aren't too good, find out if they're working, find out if they have cash, find out if they can get cash. They can. It's amazing how they can do that. Now, my name is Ted Thomas, and I'm finishing up this video. Before I finish, I want to tell you 2 mistakes. The big mistakes people make at the auction is, 1, they buy property they haven't seen. Don't do it. You wouldn't marry the woman if you hadn't seen her. Why? Well, you can figure that one out, but I'll tell you with real estate, what if it's next to a chicken farm? That's not going to smell very good. What if it's had a fire? What if there's been a windstorm and damaged it? So you don't want to get one of these properties that you haven't looked at. Number 2, don't buy any property at auction unless you have already figured out what you're going to sell it for. You don't want to get an auction, start bidding, and then win, and then have spent too much money. So you don't want to do that. So right below me, there's a free gift for you. Take advantage of it right now. The free gift is below me.